So we're just prioritizing that a little. Hello, everyone. Welcome to Going Live with Good Soil number 67. Sorry for
Take
the
two.
confusion. Yeah, take two. Sorry for the confusion of people on Twitter Spaces. We got a lot to talk about. Tesla Tuesday is not happening this Tuesday, but Matt and I are still doing our normal live stream on YouTube and Spaces at the same time. So Matt, as we were preparing, I just came across the article. I was telling you that about this report that Elon Musk spoke directly, according to Ian Bremer, which may or may not be trusted. I don't know. He's said controversial things in the past, I know. According to Ian Bremer, he spoke directly to Elon Musk about Musk talking about his conversation with Putin directly before Musk tweeted out that idea for a peace plan. And so, I mean, I think Elon is well known enough in the world that if he wanted to engage in a direct discussion with Putin, he could probably make that happen. Do you think that's true, Matt?
Yeah, and Elon even admitted in a tweet that he spoke to Putin last year at some point. So it's they certainly have had something of a relationship. Probably not a super friendly one, I would imagine. But I think they're two pragmatic people in very different ways.
Different ways, yes. Be careful. There's a lot of very sensitive people. I mean, rightly so. People should be sensitive. So this is a very delicate subject to talk about. Anyway, go on.
But it's interesting that he basically admitted that he spoke to Putin last year, and I was kind of wondering what that context, like, what would that even be about? So it certainly seems within the realm of possibility that Elon could have tweeted or spoken with Putin before his proposed peace plan came out. And in fact, in listening to a lot of the kind of pro-Ukrainian accounts that were criticizing Elon, they basically said his tweet sounded just like Russian propaganda. Something like I forget the exact phrase that Elon used, but there was some phrase that was something of a dog whistle of Russian propaganda. So to me, that this has some shreds of credibility to it.
Yeah, I believe so, and it's fascinating to me that. I think it's a really good thing that Elon is trying to use his influence to try to encourage some kind of peace. I don't know. It's just I hate all the warmongering. So many people beating the drums to just destroy Russia or Putin at all costs. But at all costs is like the variable that is widely variable. So
Yeah.
it could mean we're entering a suicide pact. The rest of the world is entering a suicide pact with Ukraine to do that, and I don't think we want to do that. So
Yeah.
it's
So
scary. We don't know.
The thing Elon tweeted, which I know sent a lot of the pro-Ukrainian people kind of off the deep end, was he said Crimea, formerly part of Russia as it has been since 1783, in parentheses, until Khrushchev's mistake. So I guess that phrase Khrushchev's mistake was essentially during the fall of the USSR, allowing Crimea to be part of Ukraine instead of part of Russia. So. Yeah, I think my views are constantly evolving here, and we don't want this to turn into some sort of political show, but it's incredibly relevant both to the things that Elon is doing and frankly to the entire investing world and just humanity. I mean, this is such an important story that I think it warrants just talking about.
Yeah, absolutely, and I mean. We'll try to keep it limited on this topic, but it's important in the bigger scope of the entire macro stock market and Elon Musk, as he's involving himself in this, and I think rightly so. To be honest, I know a lot of people are sick of Elon Musk getting involved in politics, but I think it's a good thing that he's the smartest person on earth, the greatest engineer in the world. Like, I think he, if anyone, should be trying to help engineer a solution to this where there's more, less human lives lost net. That's the bottom line, is how do you minimize the loss of human life from this? And I think that's what he's trying to work towards. So
yeah, definitely. I mean, you can certainly criticize, the proposal or whatever, but I think what's most important in my mind is that we don't go to nuclear war. And the thing that I was struggling with like a week ago is I don't see how we de-escalate from here. But if there's actually some truth that Elon would be open, or that Putin spoke to Elon, and that this proposal that Elon came up with would be a way to kind of back down, and Putin could have some sort of victory to claim on the home front. I still don't know that the Ukrainians would agree to that.
No, I
But
don't think the Ukrainians would, unless maybe the West really pressured them to do so somehow, maybe. But there was almost a deal on the table, I think, back in like March with like, I think Turkey put it together, but then like Boris Johnson, the US, like said, no, don't take the deal. We want to destroy. Basically, the West convinced Zelensky not to take the deal, to like agree to never become part of NATO and give Russia Crimea or whatever. And it was like something similar, but a little different. Maybe the deal is my recollection. And I think if everyone could go back in time, they would love to figure out how to make that deal work. So I'm just worried that in another 6 months, we're going to say, I wish we could go back in time to now and make the deal work. Because I think that's what could realistically happen. So the stakes are going to get worse and worse every round we have on trying to make a deal. So I don't know what it's going to take.
yeah, I see someone in the comments, Ekapob says, if there's World War III with nukes flying around, there'll be nothing left to invest in. And it reminds me of this kind of dark tweet that I saw somebody post today. It was like a recreation of what would happen to Earth if like the largest asteroid in the solar system crashed into it. Obviously, it was just like this massive fireball. And somebody retweeted that and said, well, if this happens, the Fed will be forced to lower rates. It's just like,
yeah,
it's like,
yeah.
oh, it's just like, it's almost so dark. The point that we're in right now, that we're even talking about all this, it's just, it's a bit of insanity to be going through these scenarios of, such a global calamity. But anyway, we do have some exciting stuff to go on to.
Yeah, I see I see Art Vandelay, kind of trolling me, saying I'm a parodying Russian propaganda and stuff, and that Elon's like, an agent of Russia. I don't know. I don't think that's the case. Their mindset is just determined to make this happen, and that might be wrong. As wrong as we think it is, that's what Russia's doing, and we can either the rest of the world can figure out how to handle that, or cope with that some way, or not. And if they don't, then potentially nuclear World War III happens. That's the problem, I think. So I don't think we can't control Russia, obviously. So it's tough. We'll move. So we'll move on to other macro markets.
People up in the comments. So maybe
people in the comments are very upset. Yeah, I understand.
How much is Putin paying you, Emmett? That's what I want to know.
I don't know. I mean, it's wrong. It's very wrong what they're doing. I agree, but they have their reasons for doing it, and I can't tell them. We can't make them not have those reasons. Like we can fight them tooth and nail to the end, but what does that mean? What is the end for them, right? And it sounds like it could be something catastrophic for the world, and that's what I'm worried about. I don't think people a lot of people don't seem to believe that, or don't seem to take it seriously, or understand that catastrophic end that Russia seems, it appears to be willing to fight to.
Yeah. I mean, I think, so I was talking maybe a year ago about how I've like a kind of casual student of history. And it seems like one of the mistakes that civilization after civilization kind of gets into is, they kind of think that the strategic goals achieved through war are going to be greater than the cost of war. And that's almost never, almost never works out that way.
Yeah.
In almost all situations, both sides lose more than even the victor gains. So it's, my heart is completely on the Ukrainian side. I think they're, completely justified. I think the behavior of Russia just in invading is obviously abhorrent. I think their behavior with all the alleged war crimes is needs to be dealt with in some manner. But it's such a catastrophic risk if we just don't kind of think 2 or 3 moves ahead. And what could happen in a worst case scenario is kind of horrifying. So
yeah, I see Farzad saying dialogue is how problems are solved, and other people are saying keep talking, more dialogue. But then there's a lot of people upset saying I'm parodying Russian propaganda, don't talk anymore and stuff. So, and people are saying, Farzad, seriously, you want a dialogue with Putin? People are just saying no dialogue. I think dialogue is important. How is communication not important in times like this? I don't understand how people say, stop the communication, fight instead. I don't understand that mentality. That's like, it's a terrible mentality, and that's how wars get worse. So I wish, I understand Ukraine is very justified. Yeah, justified, rightly so. And justified anger, unfortunately, is not always a healthy solution. Justified anger can cause a lot more problems potentially. So in here, we're talking, the stakes are very high. It's like the end of the world stakes. So, people are saying, no, Putin's not going to. How can people be so sure? That's what I'm saying. People were so sure that he was not going to invade Ukraine, and he did. Like
Mhm.
it dumbfounds me, to be honest. It's not Russian propaganda. It's the reality. We live in an uncertain world with uncertain times. I don't think people understand. If you give into this, then what happens next? People say, yeah, blackmail. It's not that simple. I think you could argue that we've taught Russia a lesson already by making it so difficult for him to try to liberate the things in Ukraine he thinks he's liberating. So you could argue that that's going to dissuade him from ever trying to invade something else again. And maybe it dissuades China from, militaristically invading Taiwan, seeing what Russia's going through even. Who knows? So there's potential good things to be taken out of this if a peace deal is arranged, in my mind. That's what I'm saying. So
Yeah.
that's my
Yeah.
my
I
take.
mean, like, this is not like
Matt,
you and I are
we
not,
lost you, Matt.
oh, you lost me? Why does
Okay,
this
I
always
hear you
happen?
now. Yeah, go on.
You hear me
Your
now?
volume's cut now. Now I hear you. Yeah. Now I hear you.
I've got, it wouldn't be a good soil live stream without a technical issue. So I mean,
Yeah.
you and I are not, experts on, the political theory or anything like this, but I think it's just important to kind of,
Matt, you're cutting out
raise
again.
what is going on.
Yeah.
All right. What
Yeah, your
can you hear me
internet's
now?
not very good. Yeah, I guess Elon's taking down your Starlink too, I think. So I hear you now. Yeah, it's just it's fine on YouTube, Alex says. Just Twitter Spaces it's bad. So keep going. Yeah. Sorry.
All right. No, that's fine. I mean, we should probably transition. It's been 11 minutes of this. I mean, yeah. The only thing I was going to say is that you and I we don't
Yeah.
have the answers, but I think like pushing the dialogue forward. And my own thoughts have evolved. I mean, I was much more of the like let's just continue supporting Ukraine view like a week ago even, and then just hearing a lot of the the comments that David Sachs put out and like some of the thoughtful criticism that Naval had. Like I still think I do agree with a lot of the thinking of Naval that like ultimately this is really going to be like Ukraine has all the right in the world to see this thing through how they want. But I think the West has an option to not continue fighting. To like before we jumped on, you were saying
Mhm.
that allegedly Elon declined Ukraine's request to have Starlink activated in Crimea. And it's like I think that's a reasonable line to draw in the sand to avoid like further escalation directly with Russia. So it's a tough situation, obviously. And we don't have the
Yeah.
answers, but it's very much worth examining different sides to this.
Yeah. Yeah, exactly. All right. So we'll move on. Lots of comments all over the place. Um Kathy Wood. Well, first, also the macro market is just not going our way. Today started off really bad. Finally, it's become positive since we've been talking. Wow, good stuff. All right. So the macro market, the Nasdaq is up again now, positive. Tesla is back in positive territory. I did see there was kind of it wasn't a major headline event, but the Fed had a survey results coming out that's saying that households in the U.S. Predicted a sharp pullback in their spending plans over the next year, and this pullback from the month before is the sharpest the pullback's ever been since this survey's been getting done, which is since 2013. But it's a data point the Fed is looking at. And there's other data points within this survey, obviously. But I think I would not be surprised that this survey result that it came out around 8 a.m., I think, Eastern West Coast time, so around 11 a.m. East Coast time. I wouldn't be surprised if this survey result is sort of the reason the Fed, the macro market has slowly rallied, not strongly, but kind of slowly pulled forward from its lows of the morning. Have you seen that survey, or do you think there's anything truth to that?
So no, I had not seen that survey, but just anecdotally from people I'm talking to, I think people are starting to really feel the fear of the recession. So, got a couple family friends who are like having issues with their car, and they're like, I don't want to like increase my spending right now because like they still have jobs, like everything's going fine, but I think there's just this increasing fear. I mean, if you look at like where the sentiment index is, it's like extreme fear right now. So to me, it seems like what surprised me is how strong the economy has remained. Like through the first 9 months of the year. So I think the fact that the survey is starting to kind of indicate that consumers are starting to tighten belts a little bit. That seems like what should happen after the Fed has raised rates so aggressively this year. Uh, but yeah, I don't know. Did it surprise you, Emmett?
Yeah, it surprised me, and it seems like a data point in the right direction. A few more of these data points, and maybe there will be a pivot. But it seems like the Fed is very strong. I mean, that's basically you're fighting. This survey is showing that inflation expectations are coming down because the survey also found the public sees inflation at 5.4% a year from now. But in August, when they did the survey, the public saw inflation at 5.7% a year from then. So the September reading of 5.4% is the lowest inflation expectation in a year, according to the survey that gets done monthly.
So let me ask you, Emmett, what do you think? If you had to answer that question, where do you think inflation would be 1 year from now? So October 23 over October 22.
Yeah.
How do you think that would pan out?
I think 0 to 3%. I think there's going to be some I would say normally, if there wasn't like a rubber, it's like a rubber band, and it got pulled back so far with inflation that now it's in the process of coming back, and it's going to overshoot back to like a deflation, almost a deflationary force. I don't know if it'll make the inflation reading actually be negative. Year over year.
Yeah,
I don't know if it'll get that
that's
far, but I think it could potentially get that far. But I think it'll come back enough where the inflation will be like 0 to 3% a year from now, somewhere in that range. What do you think, Matt?
well, like I'd be very surprised if it's over 3%. And my
Me
my
too.
kind of baseline is like somewhere around zero, actually.
Hmm.
And just because you've got such a huge kind of like buildup of things right now, and like it's just starting to become clear that retailers have way too much inventory. I mean, there were a couple anecdotes of this earlier on in the year with like Target and I don't know if it was Walmart, but another large retailer like that. But now it's like Nike is doing that, and there was some kind of broad-based survey that indicated inventory levels were just at this kind of drastically high level. So the only way to clear that out, especially in an environment where consumers are starting to tighten their belts, is going to be to heavily discount. And so you're going to, I think, have that going on. You've got housing prices, which I think are just on the verge of getting wrecked. The Manheim Auto Index, which Kathy Wood talked about, that's starting to really plummet. So you've got all these deflationary forces, and at the same time, commodities in general have come down, although some of them have remained quite high. Oil in particular, and then I think the fears of what's going on in Ukraine are going to continue to make energy prices high.
Yeah.
But like you've got so many parts of the economy that I think are going to be deflationary year over year. To me, it seems very hard to believe that we could have, especially with interest rates where they are, that you could have inflation of say 5.3% or whatever that survey said right now
Yeah.
next year. That
Yeah.
seems
Seems hard to believe
ridiculously
to me.
unlikely. Yeah,
I agree, especially with the owner's equitable rent. Is that what it is? Equivalent rent.
owner
That
equivalent rent. Yeah.
Yeah, that's gonna be a lagging result that'll take 6 to 12 months from now to kind of play into the CPI readings and such, and that's 40% of the CPI. So that's gonna also, I think housing prices are coming like are expected to go up at a lower rate than previously expected by the public in this survey as well. So there's lots of indicators showing that expectations of prices going up are coming down at least. So that's good because I keep thinking to myself, the Fed's fighting inflation on one hand, but they're also fighting inflation expectations, two separate things. Just like the stock and the business are two separate things. The stock is like the expectations of the business, and the business is just the business itself or something. So it's sort of interesting. So hopefully this data point is strong for the Fed. I don't see them changing their language. I think it'll still be 75 basis points in this next rate hike. But maybe beginning of next year they pivot. I don't know.
Yeah.
It's a tough time. But I saw Kathy Wood's open letter to the Fed. Did you get a chance to read that or look at that?
So no, I meant to do it, but I got too sucked into my
Oh,
earnings model this morning. So I did see her in the know last week, which I think you said commented
yeah, it's
or
essentially the
parroted a lot
same.
of the same things. Yeah. So what
My
was
two
your thought?
my two big takeaways from her letter, and she's been saying some of this stuff for a while. Like one thing she's saying is like the rate increase, moving the Fed moving the rate from 0.25% to like 2.5% plus in the matter of like a few months like this is like historic, even though 2.5% rate increase nominally isn't historic in 6 months or a year or whatever. But going up 10x, from 0.25% to 2 point, like the actual interest rate 10xing, is what's a bigger factor you're not really accounting for in the economy for a lot of reasons, and that's an interesting way to look at it, and there's some merit to it, I'd say. Um, but the other interesting thing I pulled from the letter and from her in the know episode that hadn't really stuck out to me before and just kind of clicked in me is that how is the Fed how is the Fed? It's supposed to be a committee of like differing voices. Like some people say this, some people say this, but how has it been unanimous in the last few rate increases? And how has it been so unanimous on this when there's conflicting data in the face of conflicting data? Like you would think there'd be some like dovish person within the Fed that's like not unanimous, saying like, I don't know if we should be raising 75, maybe just 50, or let's just like, but it just seems strange that it's so unanimous on this historic rate increase right now in the face of conflicting data. That's what I pulled. I don't know where there's something there. I don't know what's up with that. It's like, yeah,
Yeah, I mean, it seems clear they were way too slow getting in front of inflation in the first place, and this is another thing that just shocks me about Elon is like he was warning about government spending, last year when they were trying to do the Build Back Better plan, and he's like, no, we got a problem, like we're spending too much money, and at that time nobody really like had that view,
yeah,
so it was just like it's just ridiculous how many things across how many different subject matters he's been right about. But so like the fact that now like like early this year they finally figured out that they had this problem with inflation, and now it's like they're scrambling so far to pick things back up. And like Elon was saying a month or two ago, they really should be lowering rates now, and instead they were like raising into a recession,
yeah,
which is just it's like very clear. It's like okay, like we're accelerating the car into the wall. It's
yeah,
it's like
yeah. It's insane.
it's
Yeah,
just crazy.
yeah. I
So
mean,
yeah, I do think it's odd that like there is this unanimity from the Fed on this. It does not seem at all that the data supports the this unanimous decision that we've got. And we've got one more data point with September inflation that we're going to get. I think it's next week. Before the Fed meets the first week of November. So the Fed's actually going to meet before the election for their, to determine the amount of the rates. But before we get the October CPI rating. So I think you're probably right that we're facing 75 basis points because it's highly unlikely. I think that the September number that we're going to get next week would be so drastically changed that
yeah. I think the Fed futures were pricing at like 80% probability or something of 75 basis points. So the the futures market is pricing that, that's where I got it from. And then, that's usually right. Um, so yeah, I think that the what you have to pay attention to, unfortunately, is the language they use. Like, what semantics are they using to describe where they're going? Like, is there a slant in like, what type of words are they using? Like, how are they wording their sentence? How is Powell like? Does he leak any kind of one-liners about Volcker being similar to Volcker again in his answering questions or something? Like, there's just that's where you have to unfortunately try to read between the lines on this
yeah.
stuff now to like figure out where things are going. It's crazy. It's like so hypersensitive to the Fed. I can't remember a time in history since I've been following the markets for about 25 years. I can't remember a time in 25 years that the markets have been so pinpointly like attentive on every single word the Fed is saying. I don't know. It's just a weird time.
Weird time, and it feels like we're getting close to the end of this, like extreme fear and extreme inflation concerns. But
Yeah.
we'll see. It's potential. It could last well into next year, or that the economic crash that results from this policy, could be the next thing that is continuing to drag down multiples and companies' earnings and that sort of thing. So
Yeah.
seeing how Tesla and other companies fare in that macro scenario is going to be pretty interesting.
Yeah, yeah, absolutely. I mean, the business of Tesla is booming, as we all know. It's frustrating to see the stock half of what it was at its highs, but the whole growth tech stocks are down much more than half. So, comparatively, Tesla was part of that bucket. It's evolving to become more of a value play as their fundamentals continue to improve. So that's the main event of today. We'll talk about some other Tesla stuff too, but the main event is the earnings per share model for Q3, and we went over a kind of a brief preview of that a few weeks ago on before we had the production delivery numbers. But now we have the actual production delivery numbers, and Matt has updated the good soil investment model. And we're going to do a screen share, but we're going to talk through it because we know there's a couple hundred people on Twitter Spaces listening that don't see it. But on YouTube Live, everyone will see it. There's a few hundred people there, and it's also recorded on our YouTube channel, so you can watch it later. So here we go. Matt, you want to talk
Yeah,
us through
yeah.
this?
So I'll just talk through. This is again for those who haven't seen this before, just kind of our high level earnings per share estimate. We've been using this model for several years now, and it's proven to be pretty accurate. Even though it's a much more simplified version of like what James Stevens does, for example. But it's proven to be a pretty good tool. So we'll just talk through the major changes really. So we're comparing Q2 of 22 to Q3 of 22. So really, we're just looking at the most recent quarter and the projected Q3 numbers, and I'll kind of talk through what I think the big differences are going to be there. So starting with price, the big one is an increase of a little bit, about $1,500 on the Model 3 and the Model Y.
That's what we're
Um,
estimating.
that's what we're estimating. Yep. And so I think when we talked about this before, Emmett, I think we were talking about like a $3,000 price increase because you had all
Yeah.
these price increases that Tesla entered into earlier in the year. And it just takes, with like their 6-month backlog, it takes a long while for those to kind of make their way through the orders.
It's like the
But
owner's equivalent rent. Yeah.
it's true. Yeah. 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 So
Takes
like
a long while to show up in the results. Anyway, go on. Yeah.
but so when we walked through this last time, we were thinking the $3,000 price increase made sense. But a couple pieces of information we got late in the quarter. One was just kind of anecdotes, such as your own order of the Model X, which is priced about $25,000 cheaper than the current one. That was delivered in Q3, and we heard from at least one other person who had that. So it does seem that at least some amount of the much older priced at least Model X's were delivered this quarter. So that's going to have some sort of impact on the overall average selling price. And then the other thing was the Hertz order from last year. There was news at the end
Hey,
of the quarter
what?
that,
One quick second, just so,
yeah.
2 minutes ago, Elon just tweeted in response to that article we were citing earlier from that he said, "No, it is not. I have spoken to Putin only once. That was about 18 months ago. The subject matter was space." So it sounds like good thing we
Oh, interesting.
prefaced that this is
Good.
coming from Ian Bremmer, who is controversial and may or may not be trusted because apparently he cannot be trusted because he's the
Let's
one
say bad
reporting
things
that he
about
spoke
Ian
to Elon
Bremmer
Musk.
now.
Yeah, no, I know, but there's some misreporting here. Either Ian Bremmer cannot be trusted, or the reporters who were talking to Ian Bremmer cannot be trusted, and they totally misunderstood what he said. I don't know. So for whatever reason, Elon is denying talking directly to Putin before he put out his tweet, his peace plan. Just so we're just putting that on the record. Anyway, sorry, I wanted to just mention
No,
that
I'm glad
as
you
so I saw it.
clarified that. You don't
Okay,
want
or Elon
something.
clarified it. Yeah,
Yeah. Okay, so what I was saying though is the price increases. It certainly seems to be the case that on the whole, a lot more of those price increases are going to hit in Q3 relative to what was delivered in Q2. But that's probably offset somewhat by the lower priced Model X deliveries that happened, as well as the Hertz orders that were, I think, at least 12 months ago, which were at the lower price. So
hmm
essentially, just lowered the amount of the price increase that we're projecting comes through this
hmm
quarter.
okay.
So
That's pretty
let's move.
conservative, though. We're being conservative there. Yeah.
It
So
is,
anyway, go
and,
on.
and at the end of this, we can go and do some sensitivities. You can run your numbers, Emmett, if you want.
Yeah.
So then, this is just the deliveries. We've got the final numbers. So those came in there.
So what was the
Although,
deliveries? It was 343,158 because people can't see
yeah,
this. We're just going to say, yeah. So
yep,
340,000. Everyone knows that anyway because it was reported on
yep.
October 2nd. Okay,
I
go
think
on.
I think I actually still have the wrong Model X number in here, but the overall number is right, so it doesn't really
Okay.
change the update or the figure. So FSD take rate, I'm assuming that's 7%, but I'm also assuming that there's going to be 9,000 upgrades this quarter. That could well be
Yeah.
too high. You got to estimate something, I think, in order
That's
to
a
do this right.
conservative, right? Because we
Well,
backed
it
in
might be
10%.
aggressive. I don't
Well,
know.
you backed in 10% for Q2, and so now we're saying it's 7%. We're estimating for Q3, right? So
Yeah, so I'm
when you
assuming
backed in 10%,
a
I was like
drop
you did some complicated math inferences to back into 10% for Q2, and so now we're saying 7% for Q3. So I think that's conservative, being a drop. I think
Yeah,
you could say it should be the same or more, but saying it's dropped because people it's being cannibalized by maybe the FSD
by the subscriptions. I think there's going to
enhanced
be more
autopilot and
enhanced
stuff.
autopilot subscriptions. That's the big
Yeah.
one. I mean,
So
that was
yeah,
introduced real late in Q2. So the big
yeah,
assumption is that there's going to see a lot more enhanced autopilot subscriptions, which frankly don't contribute too much meaningfully. I mean, we could drop this to zero and it would hardly move the numbers,
yeah,
but they will accumulate over time. And so then, like 5 years from now, this should be a pretty meaningful line if a decent number subscribe to that, or if they just move up the value chain and go for the full FSD subscription instead. But I think it's at least reasonable to assume that FSD take rate will be cannibalized a little bit.
hmm
And you've also got FSD subscriptions, which I haven't changed the assumption on.
okay.
Um, so that gets to what I call like the pure automotive revenue. So you're just kind of multiplying all the hardware times the selling prices, and
That's
then to get
19 point. So people are
yeah, sorry,
listening. That's 19.75 billion, and it was
yep,
14.52 in Q2. So you're saying that it's going up to 19.75, the pure automotive revenue. So I'll be curious to see what our margins estimates are. Anyway, go on. Yeah, let's see.
yep. So I won't spend too much time on this whole deferred revenue, full self-driving number here, except to say that previously, when we were going through this before, I was assuming that Tesla would recognize some of that deferred revenue. I think with some of the clarifications we got on AI Day, I'm thinking that's now much less likely. I think they'll probably recognize more of that revenue in Q4 when it truly goes to wide release. It seems like there's still several 100,000 people in North America who don't have it yet. So I'm basically assuming no change there. Then on the regulatory credit side, I'm assuming $350 million, which I think is on the conservative side. And then just a small amount of like acceleration boost and other revenue streams. So then adding in your lease revenue is calculated in a whole separate sheet. We're not going to go into that. You get $20 billion of total automotive revenue. And then
hmm
I think we're going to see a pretty big boost in energy revenue this quarter. And
So
the
it was
reason for that,
866 million last quarter, and now you think it's going
yeah,
to be what?
1.1 billion. So just over
Okay.
1.1 billion. But there's been a huge amount of stationary storage deployments recently, and we know that they're really building out that capacity. Martin Viecha even said that they're not constrained anymore, cell constrained on the stationary storage side, and we know they've had this massive backlog. So to me, it stands to reason that they're going to really start ramping up stationary storage deployments in particular, and maybe a little bit more solar deployments as well. But I think stationary storage is going to be the main story to watch there. And then on the services side, I think we're gonna see another pretty significant increase there. Again, the issue coming on here is that you've got this is the second quarter now where you're going to have lease vehicles coming off of lease. So the Model 3 lease, which was introduced in Q2 of 2019, you're going to
hmm
have a full quarter's worth of those leases that are now coming off
Nice.
at residual values of, like, if you look at the residual values of Model 3s from 2019 on the Tesla website, like most of them are going for over $50,000, and they're probably
Wow.
on the books for like 25,000 or something like that. So there's a really
Wow.
huge markup, and so we had we'll jump down here just a second, then we'll come back up. The services margin had historically been negative, and it jumped up to positive 56 million, which is a 3.8% gross margin in Q2.
Yeah.
That was the very first quarter that they
So
had this
how
kind of
negative
benefit.
was it? How negative was it historically? Just by contrast, do you know, was it like negative
Um,
100 million or negative 500 million? I can't
Here,
recall.
I can unhide these. So, I mean, it was like back in the day, like, in 2020s,
Negative
it was like
80
minus
million.
15, 16. Oh, sorry. This
Oh,
thing is a little bit, I'll go back here, but it was minus
okay.
20, like minus 10 to minus 20 percent margins in the past. Then it like slowly whittled down in Q1 of 21 to get to like very close to zero or break even, and then
Hmm.
in like Q4 and Q1 it was basically break even, and then you saw this jump to profitability. It was like increased 4% essentially in Q2.
Yeah.
So like, it's been steadily increasing, but I think the big jump that we saw in Q2 was really related to
Just the beginning of the delivery of the leases coming back and
of the
being
leases.
resold. Yeah,
Yeah.
that's
So I
big.
think that trend's going to continue to accelerate. So let me zoom back in here so it's a little bit easier to read.
It's
So then
funny.
what?
It's funny because remember we did that. Just a quick tangent. We did that Prometheus uh, virtual uh, dinner where we presented our idea of Tesla, and then in the Q&A portion, one of the other hedge fund managers who admitted he's short Tesla, and he was a smart, sophisticated guy. He asked you, I think, about the services, right? Then he say like,
Yeah.
don't you think Tesla is making a lot of money on service, but hiding the money they're making in service and moving it to their automotive gross margin to make the automotive gross margins look better than they are? Isn't that sort of what he asked or he suspected?
Yeah, that's what I mean. There's all these accusations that Tesla's accounting is sketchy, or like
Yeah,
they're under reserving on their warranties and that sort of thing. But I think the reality is like Tesla tries to run like the supercharger network and like the actual like servicing of the vehicles and all those things at like a modest gross margin. I think their target's like 20%. They're
yeah,
not there yet, very clearly. But like they're expanding at such a ridiculous rate that it kind of makes sense that you're not going to be profitable on all these like new service centers and superchargers that are like just built and probably a little underutilized, or at least they just haven't reached the kind of mature level of profitability. But like all these Tesla Q guys think it's like some conspiracy that like there's like funny accounting going on, and I'm like, guys, like they've been audited for years, and like David Einhorn, I believe it was, like wrote a letter to PricewaterhouseCoopers with like very detailed,
yeah,
very specific accusations. And it's
yeah,
like they're aware of what these concerns are. And so I just think it's wishful thinking on Tesla Q's account to kind of just
yeah.
hope that this is all, like a fraud essentially, and Elon's
Yeah.
going to jail. So,
Yeah,
but people still
if
think
anyone
that.
hasn't seen the Prometheus idea dinner and curious and want to see Matt kind of run circles around the talking points of like Jim Chanos and Einhorn, who basically have the assumption that Tesla is the next Enron, and they're just trying to figure out how to make that look that way. They're figuring out what suspicious ways make Tesla the next Enron in accounting scandals. That's sort of like I feel like the basis they operate under. But Matt kind of just run circles around those accusations in his accounting language with this guy, and it's really fun to watch. So I'm glad Matt was on with me, because if the guy asked me that question, I would have been like, I don't know, I have to go check with the accounting specialist and come back to you. So, but it was nice having Matt on with me to just like on the spot, just like kind of make the question look silly. Not that the guy was silly, but he's getting his talking points or his ideas obviously from people who think Tesla is the next Enron. So
Yeah. Well, I mean, it's
anyway,
kind of one of the like revolving, or not revolving, but recurring themes we have. I mean, even when we had that really great conversation with Drew Dixon, who's like reasonable as a Tesla bear, and he doesn't have a position, but he just says, at the end of the day, he's like, I don't understand their margins. Like, look at this automotive gross margin. They had like their plant shut down in Q2. For like half the quarter, and they still posted a 28% automotive gross margin, which is by far best in class. And people who've been in the industry and know that industry inside out know that that is not possible. So they're like, well, it's got to be fraud, or it's got to
yeah,
be, something.
yeah,
It's
yeah,
like, no, like they've spent
yeah,
years like destroying brain cells about like the most efficient way to do like a gigacasting, and just decide like it's like this is the
yeah,
fruit of all the hard work that they've been putting in over all those years when the stock traded sideways. And now like
yeah,
they've got a net margin which rivals Toyota's gross margin, when Toyota used to be seen as like the most profitable, like the benchmark for automotive efficiency. And Tesla just blew right by them, and people in the industry just don't understand how to process that information. It's kind of
yeah.
hilarious. So Anyway,
Yeah.
bit of a tangent there.
Sorry for the tangent. Yeah, sorry for the tangent. I just wanted to show some interesting tangent about that particular number, the services number, and why it's going to grow, and prove that accusation wrong. Anyway, go on. Yeah.
Yeah. So this gets to our manufacturing margin, which it was, essentially just how efficient is the manufacturing operations of Tesla. And so the way that we did this quarter, it was kind of a change from the way that we've done in the past. Essentially, we looked at all the different plants and the deliveries by quarter, and then we broke out the cost of goods sold and the average sale price for them as well. So you've got like here on the cost of goods sold, you've got in Q3 in particular, what is the cost of like the Model S and X, the 3 and Y, built in Fremont and delivered to the US or Canada or the rest of the world. And then same thing with Shanghai and Berlin and Austin. So this, just because they've got so many things coming online right now, I think you really do need a more detailed kind of build up. And our main assumption here is that the cost of goods sold in Shanghai in particular was going to see a drop in Q3 relative to Q2. Primarily because Q2 was so inefficient, like the limited shifts that they were running, and just like lower throughput, the lower utilization we've seen in the past. When Tesla increases, utilization and throughput, the margins go through the roof. So we got this time and said, okay, well, Q1 was a really huge increase in Shanghai in particular. You saw like a roughly $4,000 per vehicle price incur cost of goods sold increase. And so essentially assuming that with the huge increase in output in Shanghai in Q3 and just being back to more normal shifts, that would come down quite substantially, but still higher than Q1. So, Q1, the Model 3 made in Shanghai for Europe cost $35,500. That's our estimate. And we're at that in Q3 will be $35,869. So just several $100s higher in Q3 to produce than it was in Q1. So that's our main assumption. And then you're coupling that with the higher average sale prices to get to essentially an automotive gross margin when you exclude like the credit revenue. So and kind of backfed it into the overall model to a core manufacturing margin of 28.8% in Q3, and that's a big deal. This is probably the single most important assumption, because you're assuming over a 5% increase in gross margin just in manufacturing efficiency in Q3 relative to Q2. It's a really big assumption, and we could be off, but we went through a whole lot of detail that makes me believe that we're probably right than Wall Street on this number. But I'm curious to see what happens when they actually print results.
28.8% is the core manufacturing gross margin, right? That's what we're estimating.
Yep. That's right. And just to be clear, that's my own kind of made up the metric. Tesla doesn't report that because they don't report full self-driving, revenues and those sorts of things separately. But I think it's important to try to back those out to really get into that. So the reported gross margin that we're calculating, once you add back in full self-driving revenues and credits, and the leasing revenue is part of the core manufacturing, but that gets to a total automotive gross of 32.9%. Versus in Q2, they were at 27.9. So
wow.
A full 5% increase Q3 over Q2. And Wall Street is certainly not expecting that. And we're going a little bit long here, so I'll try to blow through some of these other assumptions which are less meaningful. Energy, I think just with the higher utilization like we spoke about, you're going to see an increase there. So I'm assuming energy gross margins go from 6.6% to 10%. Similarly, on the services side, for the reasons we already talked about, I'm assuming that goes from 3.8% to 7%. So then you add all that together and you get total gross profit of $6.9 billion. And a total gross margin of 30%, which is, a full 5% higher than the 25% they posted in Q2. So really everything across the board.
Total gross profit. Yeah, total gross profit from 4.2 billion last quarter to almost 7 billion. That's incredible in one quarter. Wow.
Yeah, with like frankly 20,000 fewer vehicles being delivered than was expected. So that this even accounts for that. So R&D costs, I assume those will increase, but I actually think that might be an aggressive, a conservative assumption, given all the layoffs that they had. I think it's possible that the costs or the the operating expenses overall might actually decrease. But I want it to be like reasonable because they're building out so much so fast that especially with their other operations in Austin. in Berlin. I know most of those go into cost of goods sold, but I think they're going to need more kind of global support as well. So I'm assuming this essentially stays flat, although I did reclassify something here. Don't worry too much about it, but essentially there's this restructuring charge. They had that below the line down here, but just for my own purposes, I added it up here. And then, so let's just jump to the bottom here because these other items are not too impactful. So I'm assuming total net income of 4.26 billion, which is almost a doubling of the Q2 net income. And
Wow.
yeah, and that translates to a GAAP earnings per share of $1.22 and an adjusted EPS or non-GAAP EPS of $1.32. And just for comparison, Wall Street is around. Last I checked, they were like $1.05, but that was with the old delivery numbers. So I think if you update Wall Street's estimates based on the lower deliveries numbers, I'm guessing Wall Street's going to be below $1. So we're essentially projecting a pretty significant beat when Tesla reports next week. Not investment advice. I wouldn't trade on this, but
Yeah.
I think there's strong reason to believe that there could be a pretty big beat. This is also significantly higher though than Gary Black and James Stevenson and a lot of other kind of credible Tesla analysts are projecting. So
what are they at? Do you recall? What are they kind of?
I think Gary was like $1.11, and I think James was somewhere in that sort of range as well. So very, very possible we're wrong.
But you should tweet. You should remind people every quarter, like around now. You should, along with retweeting this part of the dialogue, you should retweet. I know you're a humble guy, but you should retweet that chart, that infographic. I think I saw once where it shows like the dots of where you estimated versus where the street estimated versus where the actuals were, and people can understand how accurate you are that way when they see what your estimates are.
So I think this is the one that you're referring to, I think, right?
Yeah. You need to take a screen grab of that and then tweet that along with the link for this section of our chat. I think when we post this section of our chat on the YouTube channel so that people can kind of have some context going into your estimate, and I think that would help.
Yeah, that's probably a good idea. I mean, the thing that jumps off this graph to me is just how bad the street has been at estimating. Like the street is just like always under. It's hilarious. Like if you're a good analyst, you should be missing high, you should be missing low on roughly similar bases, but or frequency. But like Wall Street is just consistently low and by a lot. I think over here somewhere I actually have like the average variance. Yeah, so like the street is off by an average absolute value of 51%.
Oh my gosh.
Like hilarious. Like they're not even close. And I've missed by 18% on average. And so it's just funny. Yeah. And I don't know everybody else's record. Like, Gary,
I see AK in the comments saying the consensus is $1.03, but the whisper is currently $1.09. I wonder where that whisper number is coming from. That's a whisper is like a number. Whisper numbers are what people use to say like, this is the number traders are whispering to each other about what they really think, about what they, I think that's what it's supposed to mean. But there are buy side institutions that have their own models and they actually have their own expectations, which are usually different from the consensus, quote unquote. So it's hard to gauge what that actual quote unquote whisper number is. So I know there's some businesses that are made out of like these whisper numbers, like Estimize and stuff, try to make businesses out of estimating the whisper number. But I don't know if anyone in the comments knows an actual good whisper number calculation, company. I'd love to know, but you just have to kind of guess. I think what the whisper number is.
Yeah. And there's this constant issue of like analysts don't update their numbers. So like I haven't seen a lot of analysts actually update based on the actual delivery figures that were reported. Maybe they have, and I just haven't seen it. But like it seems likely to me that those who do are gonna be sub $1 on average for their estimates of Q3, just based on where they were when they were assuming 260 some thousand deliveries. One other thing I wanted to point out real quick. A lot of people have been talking about currency risk. So I'm assuming right now that there's about a $200 million hit that Tesla takes for this. And it might it might be helpful to kind of walk through the logic on that. So there's essentially no currency risk for like Shanghai delivering, domestically made vehicles in the United States, or Fremont, like in Austin delivering United States cars. There's no currency risk there. So you don't need to worry about that. Shanghai and Berlin, however, they have costs denominated in Chinese yuan and euros, obviously. And so you need to, like, their costs are going to be denominated in there, and then their revenues are pretty much going to be in yuan and euros also. So, like, essentially the way that I'm thinking about it is, if you take the total number of deliveries from those factories, which I'm estimating is like about 190,000 deliveries, at an ASP of, just call it $56,000, and then assume a 30% gross margin on that, that gets you to like $3.2 billion that's at risk of like currency devaluation, because your dollars and your
Wow.
costs are the same
Hmm.
there. So, like, I think it's important to focus on not only the revenue side, but the costs.
Yep.
So then you got like gross margin of 3.2 billion if it was all denominated in dollars, let's say. And then I looked back at the historical charts for like the euro and the yen, and compared like where they were in Q2 on average to where they are to the dollar on average in Q3. And it looks like there's roughly a 7% devaluation that's occurred in the quarter, in the last
Hmm.
90 days. And so if you just apply, that 7% currency hit to that gross margin from those factories, you get a $232 million hit to your gross margin, as that gets translated back to dollars. So I added that into this other income line here.
Hmm.
So, typically that's positive, $30 million or so. But I just added out, or I subtracted out 200 million from what that typically is, to get to minus 150. So essentially, this $1.32, this pretty big beat, does include around $200 million of currency risk also.
Yeah. Currency translation costs or whatever.
Yeah.
Yeah.
Yep. So
Cool.
that's kind of where we are. Did you want to do a sensitivity analysis with any
Nah.
of your figures, or did we just wrap it up and maybe go to some
I think we wrap
questions?
it up. Yeah, we've done it on our side. I don't think we need to do it here. We've spent a while. I'm glad you walked us through all those things, and I apologize to some folks on the YouTube stream that think I'm interrupting you a lot, and I'm just trying to clarify numbers verbally for the people on Twitter Spaces listening a couple times. But I'll
We're
try
not
to be
making anyone
more.
happy in the comments today. Don't
No.
worry. Let's just keep going.
I think my volume is too loud on YouTube. I don't know. So let's move on. Matt says, "Good job. Can't wait to see how it lines up live." Yeah, I mean,
Farzad says that. Yeah,
Farzad. Sorry, Farzad says
I know
that.
we look very
So
similar.
yeah, yeah. And the other big thing, I think you see a ton of people calling for ton of retail holders. Start with Leo Kogwan and Gary Blatt, and now you see more and more people on the bandwagon to call for share buybacks. What are your thoughts on that, Matt? Did you have any? Have you thought about that? What do you think about the share buybacks? We haven't really talked
Yeah.
a lot about it ourselves yet, so let's just talk about it on air here.
I think it's not going to happen.
Mhm.
Yeah, I think eventually it will. But I think you want to get to the point where you're extremely profitable, and I think they want to have like a really significant war chest. I mean, especially right now, like if I'm in Elon's shoes and like the global economy is looking a little tenuous. I don't know how much validity there is to the concerns about like demand in China, but you could imagine like if the economy there deteriorates even further, and demand dries up, like you just want to have a very significant war chest, to handle this. I mean, a lot of Tesla bulls, think Tesla's going to do great no matter what, and I kind of generally agree with that. But it's important to remember every once in a while that like automotive sales are very, very cyclical. So it's not like Tesla is completely immune to trends in the auto industry. They've certainly benefited from like the trend in very strong pricing that's happened. That's benefited like all OEMs the last 2 years, but that's starting to unwind. And I think Tesla's going to fare better than almost everyone else, but that doesn't mean that they're immune to, the kind of knock-on effects that will happen. So if the whole automotive market shrinks by, I don't know, like 40%, which is possible year over year, then like Tesla is probably going to have to cut prices to continue to move like all of their vehicles. And so I think they just want to have enough like liquidity to continue their very rapid expansion plans, weather any financial storms, and not like worry about potentially needing to do another, like raise some debt or something like that after they've done a share buyback. So to me, it's
Yeah.
like once the FSD take rate takes up, and or robo taxis or like something like that, I think it's going to happen. But I wouldn't bank on it for like Q4, like I've heard some people thinking. But I don't know. What are your thoughts on it?
Yeah, I'm in the same line. I mean, I would love for a share buyback to happen as a stockholder and see my stock go back up because sentiment will improve with that announcement and such. But I find it I would be very surprised if they announced a share buyback, anytime soon. Like you said, I think Elon uh he wants he's right. He in Elon's mind, there's a serious, significant, growing chance of World War III. Whether people in the comments section agree or not, that's another thing. But in Elon's mind, I think we should agree that he thinks that there's a significant chance of World War III, and I think you need to be prepared for that. And all like, what does that mean? Does that mean like a global recession, depression like we've never seen? Does it mean all out nuclear? It could be a wide range of things, and it could mean big trouble for Tesla and the whole economy globally, right? And so you want to be prepared and have as much cash on your balance sheet as possible in the face of such a huge potential catastrophic geopolitical event. So assuming the world's not ending, right? But if it's just a World War III that the world can recover from, well, you'd be better off having more billions of dollars in the bank account to hunker down for the losses of that potentially. So I think for that reason, his geopolitical concerns, he would rather not spend their cash on buying back shares, because if there was a catastrophic geopolitical event, guess what? The stocks are all going down a lot further than where they are now. So
Yeah.
it's not like you could issue more shares at a better price later if that happened. There could be PE ratios could get compressed crazily. Everything could go down 50% further if there's some major World War III breaking out. So I think for that reason he wants to accumulate some more cash, and so share buybacks. Maybe if there's peace in the Russia-Ukraine uh, conflict, somehow if peace gets broached and it seems sustainable, then maybe within a quarter or two there would be a buyback, I would think. But um, first, that's a big if for that to happen. I don't know if and when that'll happen. So that's my thought. But let's go into Q&A. We went an hour us talking. Usually we do Q&A for the last 20 minutes or so. We'll go a little longer. We'll go to like 15 minutes of Q&A. We had other things on the list to talk about, but we're running out of time here. From at AJ McCartney on Twitter, have you given thought as to why Drew Dixon feels margins will decrease when factories are fully expensed? Matt, have you thought about that?
I'm not even sure what that means when factories are fully expensed, because
Like when they're fully paid for, I guess, they're amortized. I don't know. Is that
so
what he's
I think there's that's probably not the correct accounting treatment. So I'd be curious what Drew actually said, because I if I had to guess what Drew's saying, I think what he's probably saying is like there are some costs that are just getting rolled into property, plant, and equipment, so they stay on the balance sheet. And essentially, are amortized off once production starts. So like when you're building a new factory, a lot of the costs that are like questionable, like are these actually operating costs? You can actually roll them into your property, plant, and equipment. So I think what Drew is saying is that once the plants or once the factories are into production and you're no longer capitalizing those expenses, that will drag on earnings. I disagree. I mean that first of all, that transition already happened in Q2, at least for Berlin, and I think for Austin also, because there was a large amount. I think it was like several $100 million of essentially like R&D related expenses, which were capitalized in Q1. And this was something that like Brad Munchin and a lot of others like, that's crazy. Like, and they was expecting like, I remember Brad in particular was expecting like $1 billion hit in Q2 related to just expenses at those factories. And I reached out to him. I was like, hey, like that doesn't make any sense at all. Like the total factory cost
Yeah.
is like just several billion. So you're not gonna have a $1 billion expense hit in one quarter. But he was just convinced that was the way that the math was going to work out, and it turns out that was completely wrong. And so now you're at this point where you're like they're in Q2 they were like the very like early part of the S curve. Now they're like a little bit further along on the S curve. And so when we did this cost of goods sold buildup in the model that we just walked through. Those were, I think, break even is what we assumed for Q2, and now I've got them like very slightly profitable, like maybe 10%, 15% margin on the vehicles coming out of Berlin and Austin. So it's actually going the other way. Like you're actually starting to see a benefit on the overall gross margin. So they're dragging down the gross margin percent overall because they're less profitable than Fremont and Shanghai, but the total dollars that they're contributing is still incrementally more valuable. So you're not going to like see some sort of like surprise negative hit because, oh, like Berlin's making more cars and so like margins are decreasing. That's just, I think that's a oversimplified way of looking at it. And frankly, if we would have seen that, we would have seen it in Q2.
Yeah. Next question here is from Tesla Monthly on Twitter. Any comments on MKBHD, I think Marquise Brownlee's raving review of the Cadillac Lyric? I saw that come up. I'm subscribed to like a million YouTube channels now, and his is one. I saw that. I just haven't had a chance to watch it. There's so much reviews and people raving about the Rivian. I've seen a few of those early on and such. And I don't doubt that the Lyric is probably a really cool car to be driving in. It's probably fun to drive, just like most well-built electric cars. What I doubt is the ability for a Cadillac to scale that up to be profitable for them in any way, and where it's not going to have service issues. Like a one-off, car most likely is probably going to be fine. But if you have 10 people with the Cadillac Lyric, maybe 3 or 4 of them have major like issues within the first month of driving them or something. I don't know. I suspect something like that could be the case. But I also don't believe that GM and Cadillac can build a really nice EV like that profitably. I think they're losing money on every EV they make. That's my suspicion. Matt, do you have any thoughts?
No, I mean, so I didn't see the video, but I agree with what you're saying. I mean, just one, I'm doing some quick searching just while we were talking. Apparently, the base price is like $62,000, and you think, okay, that's like good. That's kind of like comparable
Base
to
price,
like the
yeah,
Model Y.
yeah.
But like, yeah, then like if you want like the nicer one, I'm sure you're going to be paying like $80,000, and it's got a 100 kilowatt hour battery pack, and so just like thinking of like how inefficient they are compared to what Tesla's doing. I mean, Tesla's just been so good at getting both more performance out of their batteries, but also being able to make the batteries for much cheaper. So the question, like you said, is just like, can they make them at scale? No, because it's a Cadillac. And can they make them at profit? I hope so. But like if they're anything like Ford, they wish they could make more of like the Mach-E and the F-150 Lightning, but they're just like not profitable enough to do it.
They're
So
losing money, or they're losing a lot
losing.
more. They're making a lot less money than they do on their ICEs for sure. And they're
Yeah.
cannibalizing their own
So
ICEs. Yeah.
I really hope these companies can figure it out, but I like the deck is stacked against them in my mind.
Yeah, yeah. And someone thought that the Cadillac Lyrics just had a recall for software issues. Well, guess what? The Cadillac Lyrics are not getting over-the-air recalls like Tesla. You got to bring that thing into a dealer, and the dealer wants to make money every time they touch your car. So be careful.
Oh.
Anyway.
I had just quick anecdote. I had a Chevy Volt before I got my Tesla, and like I had to do a software like recall at one point. So like I actually had to take my car in, and they put like a USB drive into my car, and I was like, this is the stupidest thing. Just like it's so dumb.
Yeah. All right, let's go to the next question. I don't want to discourage other car makers. I don't think Marquise Brownlee wants to discourage. It's better to encourage the car makers. So when you see a step forward, it's good to just praise it and be like, "Oh, that's great. I love it. It's positive. It's better than any ICE can." But yeah, it's still a long ways off from Tesla. Anyway, from Carl Branco on YouTube. Do you think Dojo can fulfill a substantial niche outside of Tesla's own needs? Amazon Web Services was spawned from the need to meet Amazon's exponential traffic growth resulting from online holiday sales. I mean, my initial thought is that they will offer it outside of Tesla's own needs. I think Elon has been asked that, and in the recent AI Day even, or commented on it, and he's been asked it in the past too, I think. But so just based on that, I think they're expecting to at some point, but I'm not sure. Do you have any thoughts, Matt?
Yeah, I mean, it's like to me, it's a nice to have. Like James Dalma had a good answer for this when he was on Dave Lee's podcast 2 days ago, I think it was. And he's like, if they're successful in doing it and they can execute, then sure, they'll do that. But they've got a lot to execute on in the meantime. So to me, it's like not the sort of thing that I'm banking on for like my bull case or anything like that. But if it turns out that they figure out all these really difficult engineering challenges with this and can actually get like the product to work, and they can do it at like price points that are like better or comparable to some of the other like GPU clusters out there, then sure, it would make sense for them to do that. And that's a growing market. So it's to me, that's another one of like the options where it's like nice to have for Tesla, but I'm not banking on it.
Yeah. Next question from Oliver Thomas on YouTube. Questions: thoughts on GM announcement on entering the battery storage energy space. I was so surprised. I was like, "Where's their GM bot announcement? The humanoid GM bot." I thought they would announce that too. Where was that, man? I don't know.
Oh my gosh, I'm gonna lose it. Like, so let me just like, I had like some interaction with GM's like energy part of the business when they were first starting out, and so like I was talking to their guy who was essentially in charge of this whole division, and he came from somewhere else in the car industry. And like I was talking to him about like a power purchase agreement, which is like basically like you buy the power, but you have to like pay a set price, and it doesn't go to like you can't basically control where the electrons go. Essentially, it's just like a contract. But like this guy was like talking to him about like some very specific thing on like renewable energy credits and like how he wanted those delivered. And he's like, well, we'd like the electricity to flow to our plants in Ohio. And I was like, wait, what? Like, first of all, that's not physically possible. Second of all, that's not the question that I asked. It was just like they weren't even speaking the right language of energy. And so now it's like they had on their website that they're gonna be doing microgrids and all these things. And I'm like, with what expertise? Like, tell me, like, you didn't know what a power purchase agreement was 5 years ago, and now you're going to go and like design microgrids. Who's going to trust you to do that? Like, you know nothing about the regulations of the space. Like, you hardly
Oh
understand how
man.
like it just, to me, it's just like like it just seems so dumb. It's like you picture a bunch of like MBAs in like brainstorming in like their corporate headquarters, be like, okay, what energy things should we do? And it's like, oh,
Yeah.
microgrids, oh, hydrogen. It's like it's
Yeah.
so dumb. It's just so dumb.
I think they're in the final. Ford and GM are kind of in the final legs of their existence, or and what constitutes that is when you start having to market to your investors. So they're not marketing to customers; they're marketing the
Ugh.
ideas to potential or to existing investors and potential investors of why to buy GM stock. So these plans, if you're kind of a dumb investor and don't really understand the space, you'd be like, look, GM is doing it. Oh, I should hold my stock, right? Because it's going to do it too, right? It's
I
like, oh man.
It's true. I was reading one of an interview with that whoever the GM guy in charge of this debacle was, and he said in there like, "Well, we noticed what Elon was doing in the energy space." And it was like, "Wait, you noticed that?" Like, it's just like so dumb. Like, oh yeah, like that other car company did this, so we
Yeah.
decided, sure, let's spin this up.
Yeah.
And like, I don't know. And it's just like you
Yeah.
could just imagine there's some like B team with like a bunch of ideas and zero ability to execute that doesn't even know what they don't know about the space, and they're just gonna like go and do this. It's just so stupid.
Yeah.
Anyway, I'll get off my high horse on that. Like, I hope they prove me wrong, and like I can laugh about how wrong I was in this video. But
Yeah.
uh,
Yeah.
right now it just makes me want to puke.
I see a question from Ed Jones in the Twitter live stream comments. That's pretty good. Maybe we can post it, Alec, if you find it. It's from Ed Jones. His question: what do you think happens to deliveries, in particular Shanghai deliveries in Q4? Will they discount, or do you think they can avoid discounting and just export to the EU and other regions? So, we touched on this yesterday a little bit. We talked a little bit about it, and I think we both sort of agree that Shanghai demand or China demand is a little bit of a question mark. We have to maybe learn more on the earnings call when someone, I'm sure he'll be asked about it. Um, but if they lower prices, a small amount, then obviously I think they can deliver a lot more cars, even if there is a demand pocket right now at the current price level. So I think I think Q4 deliveries in Shanghai will beat Q3 deliveries. I think that's very highly likely, in my opinion. By how much, I'm not sure. And I think production will beat a lot more so though than Q3 in Shanghai, because they don't have those like 2 weeks or 3 weeks of shutdown time of the Model Y and Model 3 lines they had in the beginning of Q3. And so I think Q4, the production is going to be ramped up and they can export more cars. I don't see why they cannot export more cars to Europe if they wanted to. Some people have said, "Oh, there's limits to the export amount out of Shanghai." I don't know. I don't know about that. Who says that?
Yeah.
Like it's just strange to someone would say that. So I think they'll export more cars to Europe one way or another. If there is a demand shortage, and exporting to Europe is actually a good thing because there's like wait times much longer, and into Q1, well into Q1 next year in a lot of countries in Europe. But they're at the European prices, which are higher margins for Tesla made in China Model 3s and Model Ys than selling, the made in China Model 3s and Model Ys locally in China at the current prices even. So Matt, what do you think?
Yeah. So I agree with everything you just said. I mean, I think everyone kind of jumped on this bandwagon of like China demand as soon as the production and delivery numbers came out. And when they shipped 20,000 more vehicles, so clearly like they've got these major demand problems in China. Well, the
Mhm.
numbers came out this morning, and China in September sold 78,000, just under 78,000 vehicles. So to me, that's not like smelling of like a huge like desperate move on Tesla's behalf. Now maybe that was the entire backlog and like that they're down to zero now. It's certainly possible that's the case, and my base case still is assuming that there are moderate demand concerns in China, and they need to like lower prices a little bit. But like to me, that doesn't do anything to justify like the roughly $100, $90 share price hit that Tesla has taken. I would say largely on the back of these demand concerns. So if Tesla comes out on this call and says, "Hey, like we've got a 1 month or 2 month backlog in China still, and like the order rate there has dropped a little bit, but we still have more than enough demand in our export markets, even with Berlin coming online." I think there could be some very clear language around that has the potential to calm investors' nerves on this front. But yeah, I agree with you. Like it's almost like these like somebody started getting concerned about China demand, and then everybody ran with it and said like it's a fact that like demand in China is falling off a cliff. And to me, it's not as clean cut as I think a lot of people are assuming it will be.
Yeah, absolutely. I saw a comment in based on the last discussion about the GM thing. A guy in the Twitter just commented, Mr. Flibble. He says, I was trying to figure out how to like post it in the spaces thread, but I don't know how to do that now. So Mr. Flibble says, I was with a huge energy distribution hardware company. They worked on microgrids for years and had to eventually give up. It is extremely difficult, especially phase shift control, unlikely for non-electrical engineering company to compete there. So I think that just kind of
Yeah.
reinforces the fact that GM stuff is gonna be very tough.
Like I worked for an energy company that had like that sort of staff in house, and like we look at doing a ton of microgrids, and first of all, like there's no market for them, like hardly. There's a small market for them, but it's like the hardest thing in the world to do, and you like I think they think because we've got like all these batteries and like we've got smart engineers that we can figure this out. But no, you can't. Like I'm telling you, this market is different, and
Yeah,
it's so frustrating to me that like they just think they can walk into this brand new market and just stand up the business. And I just
yeah,
know they're gonna like disband it. And then all the people that worked in that part of the business, they're gonna move on to some other part of the business, and then like they'll move on to like the powertrain, and then they'll like that group of people move on to like something else. It's just so frustrating to see that constantly happening.
yeah,
Like GM had a
absolutely.
venture arm, and
All
it's
right,
like the
let's do
same thing
one
there.
more. Oh, geez. Yeah. It's all right. Let's move on to the last question from the live stream, and then we'll have a closing remark or two. All right. From Mark Gomez Tejada on the YouTube live question: Can Tesla start to finance itself the cars with the excess liquidity? Cost of finance is really significant part of the car costs. Hmm. So with the excess liquidity, I keep thinking of Interactive Brokers accounts when I'm using that term. So I'm not sure how to phrase. I don't know, Matt. Do you have any thought on
Just
what he's talking?
with
He's talking
cash
about.
on hand, I think, or
Oh,
like
cash on hand.
with their
Okay.
the strength of their balance sheet. Like they've got this
Okay.
pristine balance sheet. Could they put that to work on behalf of their customers to maybe get a little more margin and lower the cost of ownership for their customers? I think that's the question.
Okay. I don't know. Financing rates are going up, but they could certainly. Maybe that's a big plan of what they want to use a lot of their equity capital for in the future before they would do buybacks or something. It's possible. You have any thoughts, Matt?
Yeah, I mean, like, it's kind of interesting because they're sitting on, I forget the exact number, but what is it, like
18
17
billion or
billion,
something?
18 billion?
Yeah.
Yeah, like a huge amount of cash. And now, like, they're actually, with interest rates starting to go up, that actually creates a little bit of an opportunity for Tesla to put that cash to work, because clearly just leaving it in cash is kind of dumb in an inflationary environment. So, yeah, maybe like they start investing in some short-term treasuries or something like that to just get a little bit of interest income, and that would certainly help, your earnings. I haven't done the math on that, but I'm like, if you got 10 billion and you're getting 3% a year on that cash balance or something, then what is that? That'd be 300 million, right?
Yeah, something
So
around
like there's pretty
500 billion.
meaningful
Yeah.
margin potential, just if Tesla starts like investing in some like, modestly accretive like debt instruments. But yeah, it would certainly be more on brand to help like finance and increase the pool of people who can afford Teslas. So I mean, to me, it seems like fairly clear that they've got no shortage of levers to pull to help stoke demand, and they haven't really stopped on any of those levers yet. So I think they could do it, but whether they will or not is a question.
Yeah, absolutely. So we'll end it here. One comment I want to say, I mean, the macro markets, I see some comments about macro markets getting crushed and it's killing Tesla. It's true. The macro markets are getting crushed and they may continue to get crushed. We don't know. They might rebound or they might just trade sideways for a while. But, the way I think about it in my head as a Tesla, we're all kind of in this boat together as Tesla shareholders. I think most people listening are owners of Tesla stock to a large degree, maybe. And the way I think about it, that at this point, that's getting me through like the tough down times with Tesla is, I've in my personal accounts, I've limited my margin, so I really have almost no margin, so I can hold on for dear life for a long time. Even if Tesla stock goes down substantially further, which is possible, right? And if that happens because the macro market's crashing, the comfort I have is in the business of Tesla, and the business of Tesla is continue to boom. That's why we study the business of Tesla, because as the business grows, there will be a point where the revenues and profits, it makes sense for them to distribute that back to shareholders in the form of dividends, let's say, or share buybacks, which is sort of a convoluted way of doing dividends in a way. If you think about it, it's like a synthetic way of dividends, almost in a way. So they're going to distribute that cash. The business is going to generate enough cash at some point where the distributions of dividends, let's say, go back to the shareholders that are very substantial compared to where the stock price itself is at now. So that could be 5 years, it could be 10 years, it could be not. It could be 5 years from now, maybe. I'm thinking maximum. But at
Mm-hmm.
some point in the future, even if the stock continues to compress, PE multiples can continue to compress, much more low. Like Apple had a very low PE for a few years, a decade ago. If Tesla's PE compressed continuously from here, you could see a stock price that gets cut in half from here potentially. I'm not saying it's likely, but if the whole macro market's crashing, anything can happen. But as a long-term Tesla holder, I believe in the business, and at some point, the distributions back to shareholders will more than outweigh, the cost of the shares at that time, and the share price will eventually come back up again, just like it did for Apple eventually, and so forth. So anyway, that's how I think about it, to keep myself pictured on the long term instead of the day-to-day movements of the macro market.
Yeah, and at the same time, the fundamentals like are increasing and improving at such a dramatic rate that even if like PE ratios just stay where they are, then like there potentially could be a very drastic increase in share price. So not investment advice,
Yeah.
but like ultimately, I think we're both saying the same thing, but in different ways. It's like the fundamentals of the company are incredibly strong, and they will
Yeah.
ultimately win out. So
Yeah.
it's just it's
Yeah.
I don't know what other company you'd want to be in this time, like more than Tesla. It's like
Yeah. If you have
they've
a
got
long
such
enough
a
time horizon, there's no other company. Yeah. And because I see some breakfast pieces, does that mean by January 2025 leaps? I mean, that is 2 years out. I don't know what's going to happen. Like, the Fed might keep raising rates into next year to go to 10%. Like, it might ridiculously destroy the economy. Maybe PE multiples get compressed. So maybe the January 2025 leaves, if that happened, would be a terrible investment right now. But if that doesn't happen, they could be a great. So it's risky. What's not risky in my mind. This is not investment advice. What's not risky is if you're long term focused to just hold the shares long term. That's not risky in my mind. So anything else that needs something to happen within a certain time frame, which we can't control what the macro market's doing in any like short amount of time in the next couple of years, even, at some point the Tesla business and fundamentals will catch up even beyond, compressed multiples where they can pay back, dividends well above, even the current share price market cap in yearly, probably in 10 years, if they succeed in the bot, for example. So there's lots of reasons to hold the stock long term and feel comfortable about that in my mind.
Yep. No, absolutely.
Yeah. If I could just blink and fast forward to 10 years from now, I would be like, wow, I can't believe Tesla stock's done so well, but I wouldn't want to just like fast forward my life for 10 years, but sometimes
Just
I
your
think
bank
like
account. Just
my bank account. Yeah. Or if I could just blink just to see and promise that I'll hold it and then come back to I'd be fine, but it's just, it's funny. As long as World War III doesn't happen and we don't all die. Yeah. So that could happen too. You never know.
Future's full of extremes. Either Tesla's going to do really good or we'll all die a fiery death.
Yeah. It's becoming increasingly real. Whether you think it's increasing from 0.01% to 0.1% or from 1% to 10%, it's increasing. So anyway.
Let us
All
know
right,
in the
Matt.
comments what controversial topic you'd like us to pick up next week. We'll be sure to keep the negative comments coming.
Yeah. Gun rights or something. I don't know. Yeah.
Gun rights. Yeah, good idea.
I don't even want to talk. You don't even want to say the words of controversial topics because then you just trigger people and they just hate you for saying the words of things. So it's crazy. Dialogue is important. I think it should happen. It's important to have dialogues. All right.
Yeah. Absolutely.
Anyway, end of discussion. All right, Matt. We'll see everyone next.